What if moving to America secretly costs you thousands of dollars before you even understand how the system works? What if the biggest financial danger for new immigrants is not low income, but confusion about credit, banking, and hidden fees? Every year, millions of newcomers arrive in the United States chasing opportunity, yet many lose money simply because the financial rules are different. In the next few minutes, you'll discover the 5 most expensive money mistakes immigrants make in America and how to avoid them. Number 1. Ignoring the American credit system. The first and most expensive mistake is ignoring the U.S. credit system. In many countries, your financial strength depends on how much money you earn or save. In America, your financial power depends heavily on your credit score. This number acts like a trust rating that determines whether you can rent an apartment, finance a car, qualify for loans, or even secure certain jobs. Here is the shocking reality that surprises most newcomers. Your financial history from your home country usually does not transfer to the United States. You may have managed money responsibly for years, but when you arrive in America, you often start from zero. This creates an invisible financial barrier. Without credit history, landlords may require larger security deposits, banks may reject loan applications, and lenders may charge higher interest rates. 2 people with the same salary can pay very different costs simply because one has credit history and the other does not. This is why many immigrants unknowingly pay thousands more during their early years. Building credit requires patience and strategy. It usually begins with establishing financial identity through a social security number or individual taxpayer identification number. From there, newcomers often start with secured credit cards or credit builder accounts. These tools help demonstrate responsible financial behavior by making small purchases and paying balances on time. Over time, this builds trust within the system. It may seem unusual, but in America, your credit score can be more powerful than your income. Understanding this early reduces long-term financial costs. But credit mistakes are not the only hidden expense immigrants face. The next mistake quietly drains money every single month. Number 2. Sending money home the expensive way. Many immigrants regularly send money to family members abroad. Supporting loved ones is important, but choosing the wrong transfer method can silently reduce your income over time. Traditional banks often charge high transfer fees and provide unfavorable exchange rates, meaning a portion of your money disappears before reaching its destination. The difference between transfer methods can be surprisingly large. Imagine sending money every month through a bank that charges service fees and adds hidden exchange rate margins. Now compare this to modern digital transfer services that offer lower costs and faster delivery. The percentage difference may appear small, but over a year, the extra cost can become significant. Many immigrants lose hundreds or even thousands of dollars simply because they never compare transfer options. Financial policies continue to evolve, and additional regulatory costs may apply to certain international transfers. This makes it even more important to understand exactly how much money your recipient receives after fees and exchange rates. A small decision repeated monthly can create major long-term consequences. Always compare services and understand the true cost before sending money. However, sending money abroad is not the only place where hidden costs exist. Everyday banking in America can also be surprisingly expensive. Number 3. Not understanding U.S. banking fees. Many newcomers assume banks simply store money safely. In reality, the U.S. banking system includes multiple fees and penalties that can surprise those unfamiliar with its structure. These costs may include monthly maintenance charges, ATM fees, wire transfer costs, and minimum balance penalties. One of the most common and expensive traps is the overdraft fee. An overdraft occurs when you spend more money than is available in your account. The bank may still approve the payment, but then charges a penalty for covering the difference. For someone unfamiliar with this system, a simple purchase can suddenly cost an additional $30 or $35. Repeated overdrafts can quickly become expensive, especially for individuals adjusting to a new financial environment. Understanding how to monitor account balances, choose low-fee accounts, and manage spending carefully can prevent unnecessary losses. American banks reward customers who understand their rules and penalize those who do not. Learning these rules early transforms banking from a source of confusion into a powerful financial tool. But even avoiding banking fees is not enough to build wealth. The next mistake prevents many immigrants from growing financially. Number 4. Avoiding investing for too long. Many immigrants focus entirely on saving money because saving feels safe and predictable. However, keeping all wealth in cash can reduce long-term financial growth. Inflation slowly decreases the value of money over time, meaning the same amount of savings buys less in the future. This is why avoiding investing for too long can become an expensive mistake. The American financial system offers multiple investment opportunities designed for long-term stability, including employer retirement plans, index funds, and individual retirement accounts. Some employers even match retirement contributions by adding additional funds to employee investments. Ignoring such opportunities is similar to refusing free income. One of the most powerful ideas in investing is compound growth. When investments generate returns, those returns begin generating additional returns over time. Starting early allows this process to build significant wealth over decades. Waiting too long reduces potential growth and financial security. Understanding simple long-term investing strategies helps newcomers build stability and independence. Yet financial growth can still be destroyed by one powerful force: social pressure. And that pressure often leads directly to the next expensive mistake. Number 5. Trying to live the American lifestyle too quickly. Many new immigrants feel pressure to quickly adopt the visible symbols of success in America. Expensive cars, large apartments, and heavy credit usage often appear necessary to demonstrate progress. However, rapid lifestyle expansion frequently leads to long-term debt and financial stress. What looks like success on the outside can create financial pressure behind the scenes. Consumer debt in the United States often carries high interest rates, causing borrowed money to become increasingly expensive over time. A single large purchase financed through credit can require years of repayment. The desire to appear financially successful can delay true financial stability. The wiser approach is gradual progress, living below one's means, building emergency savings, and increasing income before upgrading lifestyle choices. Financial freedom grows from discipline, not from appearances. Understanding this balance between appearance and stability is essential for long-term financial success. True wealth is built quietly through smart decisions, not through rushed upgrades. Understanding how the U.S. financial system really works. These mistakes reveal an important truth about financial life in America. Success depends not only on earning money, but also on understanding how the system operates. The U.S. financial environment rewards long-term planning, disciplined behavior, and financial knowledge. Two individuals earning the same salary may experience very different outcomes depending on their understanding of credit, banking, and investing. For new immigrants, financial education becomes one of the most valuable investments possible. Learning how credit scores function, comparing transfer costs, avoiding unnecessary fees, and investing wisely creates stability and independence. Financial literacy transforms the transition into a new country from overwhelming to empowering. Technology continues to make financial services more accessible through digital banking and global payment platforms, but knowledge remains the greatest advantage. Tools alone cannot replace understanding. Those who learn the system early build stronger financial foundations and greater long-term security. In a system built on rules, percentages, and long-term decisions, small financial choices made today can shape opportunities for years to come. The sooner you understand how money truly moves in America, the sooner you move from reacting to the system to mastering it. Moving to America is not simply a change of location, it is an entry into a complex financial system with unique rules and opportunities. The difference between struggling and succeeding often comes down to understanding those rules early. By building credit responsibly, choosing efficient money transfer methods, understanding banking fees, investing for the future, and controlling lifestyle spending, new immigrants can avoid costly mistakes and build lasting financial stability. Every financial decision shapes your future. The earlier you understand how money works in America, the more control you gain over your life and opportunities. If this video helped you understand how money really works in America, share it with someone starting their journey in a new country. Smart financial decisions today create financial freedom tomorrow. If you want to be smarter every day, like and subscribe.